had to advertise if someone died in your home? Or what about suicide or ghost?
Ghost.
Woo!
Ooh. Also, there is now, or not just now, but we've got huge fines that are being issued out for realtors that are texting without consent. We're going to talk about how to avoid those fines, and then not only that, we're going to talk about mortgage rates, inventory, all those kind of things. So, my name is Alan Richardson. I'm the managing broker here at Maximum Realtor Partners.
My name is Ming Richardson, the compliance broker from Maximum One Realty and Realtor Partners.
So let's just jump right into the whole ghost thing,
Do I
right?
have to disclose ghosts in my listing?
And so like when it comes to like this the supernatural, that kind of stuff, a lot of times death, suicide, those kind of things will lead to a property being listed as being stigmatized. In Georgia, here in particular in Georgia, we don't have to disclose that someone has died in a property. We don't have to disclose that someone has committed suicide. We don't have to disclose that ghosts, those kind of
Existed.
things. But now we do have to be honest. And so if someone does ask if
Yep.
your property, if anyone's ever died in your property, then you do have to answer honestly about that, or suicide. Now, when it comes to the paranormal, that kind of thing, it's kind of like there are some states where like any paranormal activity, like in New York and New Jersey, you have to disclose paranormal activity. Here in Georgia, I'm not really sure how you would. Like I saw the
Disclose ghosts?
boogeyman,
Yeah.
or
My window shut all of a
Slenderman,
sudden.
all the yeah. This a towel fell off my towel rack in the shower. I don't know exactly what signifies paranormal, but the good part is that here in Georgia we wouldn't have to disclose it anyway. So we do need to be honest about that kind of stuff if anyone asks those kind of things, because it does matter for a lot of our buyers as well as for a lot of our sellers out there, right?
Yes, absolutely. It's not a volunteer information, but when requested, you do have to answer honestly.
Yep. We want to jump over and talk really quickly about how do we not get a call from the FTC? So the
Federal
federal,
Trade
yeah,
Commission.
the Federal Trade Commission, right? And so, especially when it comes to texting, and we do know that this is a very timely topic, because right now we are in election season, and anytime you're in election season,
There's a lot of
oh,
texts.
I mean, I can't tell you how many unsolicited texts there are, and it's very easy to get wrapped up in the fact that because we get so many unsolicited texts that there's no rules. We don't have to do anything. Unsolicited texts are fine, because are we getting unsolicited texts? Absolutely. Does that mean it's okay to do? No, it doesn't. And so the bottom line here is that as long as somebody's actually giving you their consent to receive your text, then you're okay. You're sending appropriate content out there. That being said, the rules and the fines for breaking the laws, even one time kind of thing, can
$10,000.
run up to it starts at $500, goes up to then to 1,500, but then it goes to 10 grand, right? It's really, really ridiculous. And there's numerous instances where companies have been fined hundreds and millions of dollars for texting contacts without their consent. Or, and a lot of times, those do come across as almost being bullying. Like they'll, like, and understand that that's not the purpose of real
Correct.
estate. Like for us, real estate is about relationships. It's about the relationships we have with our clients, and it really does come down to relationships. And if you annoy the crap out of them by sending them really annoying, spammy texts, you're not building any relationships, right? So we want to start off by making sure that, first of all, we want to make sure that we have consent. And there's three basic ways that you get consent. Either you get express written consent, and you'll see a lot of opt-in forms, those kind of things that do it.
Promotional, when you sign up for any promotional
Yeah.
item, typically say, can we, share information, all that good stuff. So when you say yes, guess what? You had to express written consent with whoever the advertiser is.
Yeah. Now, express consent, that is given just because of like if you check the box on like contact me, those kind of things. Even if, like if you do list your property, say for sale by owner, you're giving people consent to reach out
Correct.
to you on there. That's kind of express consent. Now, implied consent's a little bit trickier, but what implied consent is that we have a relationship, and it gives me the ability to send conversational
Correct.
messages, and then but through that a way where you can say, look, leave me alone, opt out. And that really does, like that's one of the biggest things for the folks who have who have been fined, who have lost money, and those kind of things. A lot of times they either don't have an opt out option,
Correct.
or they disregarded it, and people kept opting out, and they kept getting messages and opting out and kept getting messages. So make sure that you have an opt out option when you send text messages. I know so many realtors just use their cell phones, and as long as you have a relationship, you're going to be fine sending text messages because
But
you do
at
have
any
that consent.
time, if a client asks you, do not text them again.
Yeah,
Please do not text them
absolutely
again.
not. But now, if these are people that you aren't, that you don't have either express written, express consent, or implied consent, don't do them through your cell phone because your cell phone doesn't have an opt out option on
Correct.
there.
You can do it
Yeah,
through a promotional advertisement where the opt out option is
yeah.
available.
So don't send prohibited content. No nudies, no inappropriate, that kind of stuff.
Or anything that's polarizing.
Yeah. And then nothing, don't send any text messages before 8 a.m. or after 9 p.m. Those are the no times on there. Now, for us, we really do recommend that you use your database. For like for us, it's going to be a KV Core that we use. If you use those systems, they all have opt out options built into every text
Correct.
message that they send. It's really going to keep you really, really compliant. So doing that is really going to be your kind of your best practice, kind of as far as that goes.
Okay.
So let's talk about mortgage rates, shall we? Because they are, I mean, here lately we've been talking about how they are being civil, but let's kind of talk about what's really going on. See, the challenge for mortgage rates is that they aren't just controlled by the Fed, right? They're controlled by the 10-year Treasury, and so what we've seen is, especially over the past month and a half, we've seen where the Treasury has been, Treasury was heading really down nice, and we saw interest rates
Correct.
really down nice, and then we saw the Treasury start moving its way up. Therefore, what do we see interest rates do?
6.54 right
Yeah,
now
we're yeah
on the
we're, yeah
average.
we're running about 6.5 right now, and so we saw those jump right back up, and so you have to say, well, why have mortgage rates jumped around the way they have? Why have they rebounded? There's no reason, right? Well, first thing is that yes, the Fed cut the federal funds rate. However, they went out and did all these interviews saying, well, we're not sure if we should do any more cuts, and so
And
because
that's what's halting
that
it.
that 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 affects the 10-year Treasury is
Correct.
what that does. And so when the Fed starts talking about it, it doesn't matter what they do, because they build that in, right? And in addition to that, we've had a lot of data that hasn't really been
Very
great.
supportive of the federal cuts.
Yeah. So jobs came out really, really strong. Core inflation, those kind of inflationary numbers weren't looking that great. So that really kind of hurts a little bit. And then on top of it, we have this thing called the October effect. And,
Right.
and it's just like, generally speaking, October is a bad month for financial markets. And because our mortgage rates follow the 10-year Treasury. 10-year Treasury follows the financial markets. And October is historically like the worst month of the year. There's a lot of companies that issue earnings and those kind of things. And it is still market driven on there. And then on top of it, just kind of wrap up, we have,
Election.
yeah, I mean, and we're not getting political, but we are going
No.
to say, like, it does cause a lot of buyers and sellers to have a lot of angst about what's going on in the market, and just having election fears causes the market to have those same fears, and all that is going to be kind of what's going on. And so, as such, we're seeing where mortgage activity over the past 2 weeks, kind of thing, has,
Dropped the lowest since August.
yeah. But all that being said, we want to be very encouraging to you. Like, don't stop reaching out. Like, now's the time to continue to engage. We firmly and fully believe and see all the signs that interest rates are going to keep moving in a very positive direction. Yes, we are going to have to weather October, and it's going through there. But look, they are coming back down. So we don't want our clients to stop shopping. We don't want to start looking. We don't want to stop
But you
engaging with
need
our
to
clients.
foster that relationship because it's not an instant gratification in this business. It is a long term haul.
Yeah. Now, while we're talking about mortgages, just really quickly here, there is another. There is a mortgage company out there that is offering out 90% loan to value refis with no mortgage insurance. We find this dangerous. Like if you guys remember, like we were in the business back, well, I mean, a long time before the crash, but
Mm-hmm.
but when the crash happened, and at that time we had a lot of Americans that were taking a lot of equity out of their homes. Right now, one of the reasons why our housing market is so stable is a lot of Americans have so much equity built up in their homes. Back in before the crash, before, a lot of Americans had taken out just tons of equity in their homes, and then any kind of market fluctuation drove them over the brink. And if you can refi out 90% of your equity in a home, that's pretty dangerous. I
Well, it
mean, like
depends. I
in that
mean,
point.
we all have needs. Okay,
Yeah,
so it is it cost is it is risky? Yes, but on a caveat on that one, your credit score has to be 680 in order to
minimum. Yeah,
qualify for that loan. So understand everything you do. The lender do look at risk
yeah,
assessment to ensure that it is a good qualified loan.
yeah. Now, let's talk about what's happening as far as like people moving in, moving out of Georgia. And so, what we're seeing is that Georgia is the fifth highest state where more people are moving to Georgia than
Leaving Georgia.
leaving Georgia. Yeah, I mean, like we have the fifth largest. So Virginia, Texas, Tennessee, South Carolina, all the South, and us. So we
Yep.
come in at number five. Now, the states where they're leaving from California, Illinois, which Chicago, that kind of stuff, Louisiana, Massachusetts, New Jersey, New York. That's where they're leaving from. We come in a really respectable place. But the numbers that we're talking about
Hmm.
here, this is on people who are switching for jobs. And job switchers are a little bit different. Like a lot of people still move to Florida just for
Correct.
retiring and that kind of stuff. But these are people who are in one reason why like we like to focus on job switchers is these folks are going to be part of the economy. They're going to be,
Correct.
like getting in, having families, carrying jobs, buying houses. It's a really, really interesting thing. But the other thing that we found really cool about this data that we just got in is if you look at where are the folks who are coming to Georgia, where are they coming from? Now, overall, more people move to us from New York. However, job switchers move to Georgia from
Florida,
Florida.
believe it or not.
Yeah, I thought that was really,
Well,
really
if
interesting.
you think about it, they've been having really huge issue with
Yeah,
hurricane and everything else. So, when it's that flat and I mean,
yeah.
really, you got to go where you got to
But
go.
almost 20% of the folks moving to Georgia, almost 20% of folks moving to Georgia are moving because of jobs from Florida. That's amazing that
Hmm.
that many people are coming from one state. So having good referral networks in Florida, reaching out to other realtors inside Florida and those kind of things and building those kind of relationships could be very, very useful for your business.
Absolutely.
What's interesting is that also at the same time as it, we definitely have a much higher inflow. But for the folks who do leave Georgia, guess where they're going? To Florida. How funny is that, right?
Yep.
So go figure. Overall, just when it comes to what's happening in our local market, and especially in the state of Georgia, here in South Atlanta, those kind of things, we still have a ton of demand. Like right now, renter households are have been rising, but not just renter households that make enough to be able to afford a home have been rising since 2006.
Correct.
Like, and these are folks that can afford to buy a home. And so right now we are sitting at like there's just a recent number that came out from the Census Bureau that said there are 30 renters for every home for sale in the United States. 30, like that's a
That's a
staggering
lot.
number that there are 30 renters for every single home that's listed on the market right now. That's really, really significant. And so the problem though is we still don't have enough houses to sell. If you look at a lot of the data coming out, like we are seeing where inventory is up, and inventory is up significantly. Inventory is up about 50%
Correct.
this year versus last year, right?
But it's
Um,
still below pre-pandemic.
it is. I mean, it's down 22% from where we were pre-pandemic. Now, be careful with the national data here because of the 50 largest cities in the US, 13 of them now have higher inventory than they had pre-pandemic. Atlanta, we ain't one of them.
We're not.
Yeah, we're not. Georgia's not that way either, kind of thing.
Very
So,
blessed.
we do have rising inventory, which is a good thing, but we still don't have enough homes. And I bring all this up because the Federal Reserve Bank of Richmond, and it's one of the big Fed banks, kind of thing. They released this article, and the title is one that we hear all the time, and that is completely wrong, and that is the old adage of
What goes up must come down. Right?
but does it
Right?
really, right? Because and even the Federal Reserve Bank said what goes up must come down, right?
Yeah,
Is that
they're
right?
hesitating.
And what they're showing is that home prices have continued to grow, and and as a matter of fact, which is really, I mean, solid, is that home prices grew almost 0.5% just in the month of September, and overall, for this year, Georgia comes in at 4.53% property value appreciation
Overall.
overall. So we are still seeing where homes are still appreciating, albeit not at the same double digit
Nah.
rates that we saw in the past. And so, the Fed went out and did this study and said, all right, well, like the higher interest rates, surely that's caused prices to come down. And what they found is that no, the higher interest rates, you know what it did is it cut the number of sales. It
Correct.
reduced the number of properties on the market. It reduced the number of transactions being had. It didn't change values, kind of thing.
Oh,
We did.
it
I mean,
did
yeah,
is to change the transactional volume.
yeah. The number of homes, yeah,
Yeah.
exactly, being sold was very, very different. So overall, that volume has been falling. We've seen, I mean, for the past 2 years, just the overall transaction volume,
Yeah.
boom, 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 boom. And then all of a sudden, but
The pending home sale in September actually jumped 2.5%.
I mean,
It's one of the
we,
biggest monthly increase over a year and a half.
yeah, I mean, we have suddenly seen now. Do we think that it's a coincidence? Like, oh my gosh, why did that happen? It's because interest rates dropped
Right.
at that same
And
time,
that's what happened.
right? And that's the thing that we're really seeing right there. So in addition to that, not only did we see pending sales jump up, but new construction homes hit their highest sales in the
Yes.
last year and a half, the same as we've seen before.
So it is about affordability,
It really
realistically,
is, yeah.
versus just
It's coming down to
a
affordability. You're
yeah,
exactly right.
the we all know that we're not getting a job decrease. Okay, so we're
Hmm.
having non-inflation. We all know the cost of grocery is not going down, cause of inflation, and so therefore the value of the home is not going to go down anytime soon because since the crash, the lender has taken a good measure in making sure that whoever they loan the property to or they
Hmm.
loan to for the property is good, solid buyers. Unlike pre-crash, where anybody can have a loan. It's a bank statement loan, and sometimes the bank statement wasn't even validated for accuracy or for fraud.
Yeah.
So the lenders are now more cautious about any documentation that's being submitted. So therefore makes it a much stronger industry.
Yeah. But to go back and answer the Fed's question of what goes up
Must
must
come
come
down.
down, well, I mean, like if you look at what's happened to property values for the last 50 years, the last 50 years, property values have appreciated at 4.4% a year. So what goes up does
Does not have
not
to go down.
have to go down, and we're very
Well,
thankful for it.
that's
I
like
mean,
saying
there are fluctuations always,
yes,
and
absolutely.
yeah,
There's a time period where the fluctuation is a bit greater than the other, either opposite of the positive or negative.
yeah,
So, it just depends on where you are. But overall, for 50-year spread, even with the downturn market, we're still seeing a 50-year spread a
yeah,
4.4% increase. So
yeah.
there we go.
There we go. All right. We are in political times,
Yes.
unfortunately. I'm sorry, I don't mean to sound pessimistic in there, but Redfin came out. They did some polling and asked consumers a question: have you gotten into a disagreement with a neighbor
Over
over?
politics.
Yeah, about 20% of folks say that yes, they have. About 78% said no, they haven't. That kind of stuff. And then they did a follow up question and said, have you engaged with a with political conversations with your neighbors, and only about 12% actually said that they engage with neighbors politically on their kind of
And
thing.
about 35% or 34.5 says they avoid it at all costs because they know that there's just
Yeah.
not a win-win situation.
Yeah, I mean, almost 60% of folks say that they either avoid or try to avoid all political conversations. We really want to recommend that for you, the real estate professional, that you
Absolutely.
avoid as many political conversations as can be had. We are a very divided country. We think that yes, you should absolutely exercise your vote and vote for who you think is the right candidate. Ming
For
went
you
and
and your
voted
family.
today, actually, early voted
Voted.
today. But that being said, if you go out and you throw out something about I voted for him or I voted for her or whatever it is and that kind of stuff, you're you run the risk of alienating half of your potential clients because like it or not, we are a country that's pretty evenly divided right down the line, about half folks liberal, half folks conservative, that kind of stuff. And you can lead some people will immediately make judgments on you just based on
So
political
please
leanings.
don't even play on
If you
that
go there,
platform.
like the challenge is, like, are you doing this for your business? Just be very careful with it. We all, every political season we end up with a client who ends up losing some sort of a client, that
Well,
kind of
not only
thing through the
that,
whole
it's a
thing.
hardship, and also,
Yeah,
we're here for relationship. We're not here to destroy it. We're here to build it.
yeah. So please get more real estate ideas, tips, and tricks. You can click on the upcoming videos for one of our mastermind sessions down below, or you can catch any of our live trainings at mx1training.com. Have a great
Thank
week.
y'all. Have a great day.